How are you, traders? Good morning, traders. Good morning. Good morning, my people, mi gente. Good morning. Yes, I am so glad that you are here. I'm so glad that we are live together. I love doing these live sessions. I love it. I love it. Okay. Welcome, traders. Welcome from wherever you are piping in from the world. I do know that we typically do draw an international audience. And so I know many of you are coming from all four corners of the earth, actually. If my statistics serve me correctly, we have over 90 different, we have people registered for this event today from over 90 different countries. So you guys span the world. I forget how many different languages are piped into here. But I do want you to know that, of course, while we can't or I can't communicate to you in all of your respective languages, this event is actually being held simultaneously in three different languages. So I'm obviously speaking to you in English directly, but it is also being simultaneously translated in English and in Portuguese at the same time. So that's pretty amazing. I'm very proud of that. I'm very proud of my team for pulling that off for us all the time. And so at least we can spread the gospel of trading to those three main languages, which does sort of cover a big, expansive part of the world. So I'm very proud of that. I want to thank you for taking your time out to be a part of this event today. And I will tell you that today's event is very special because we talk about a topic today, or I talk to you about a topic today that I have very rarely, if ever, delved into with the general public, with my general following. You see, the topic today is going to be on profit taking. And so profit taking is so special that up until now, I've always sort of just reserved the topic and the training on this point or this part of the trading equation for my traders, those who are in my programs, who are actually trading my own capital. So that was one reason. It's a very special part of the trading equation, profit taking, as you know. But also, I've been reluctant up until this point to do it because profit taking is the art portion of trading. You see, every other component of the trading equation is actually scientific or should be. Now, most people don't approach the trading equation as if it's scientific, but it should be scientific. It should be certain rules and certain guidelines in your trading plan set in stone as if it were a science. But profit taking is the art part of trading. It is where some level of creativity is allowed. It is where certain additional rights that the trader has to choose things come into play. Certain rights come into play in the profit taking area. And this is something that I hope I have time to delve into. It's that psychological side of profit taking, which makes it more of an art. But yes, it's not supposed to be scientific when it comes to taking profits. There are not supposed to be rules set in stone when it comes to taking profits. Those rules set in stone are more appropriate for your entries, for how you adjust your stops, for the rules that are based on when you add, when you decide to not take a play, when you decide to go into a play in a small way, or when you decide to go into a play in a big way. All of the rules that dictate those specific actions, they should be scientific and they should never, almost never be violated. You should never deviate from those rules. But when it comes to profit taking, you earn certain additional rights to be more relaxed. When you're profit taking, you earn rights to choose. It's less rule based. There are rules, but it's less mandatory to exercise your profit-taking roles. And we'll talk about all of these things today. And what I promise you after the end of this talk, and we'll spend about 2 hours together today, is that by the end of this talk, you will have a far more firmer grasp on when to take profits, where to take profits in your trade, by how much to take profits, which is very important because sometimes it's appropriate to take all, sometimes it's appropriate to take none, and sometimes it's more appropriate to take partial profits. So we'll delve into all of that. And by the time you leave the presentation with me, I promise you, you will probably never see profit taking the same way. You'll never profit take the same way after this event. This, I'm hoping, will have a lifelong effect on you, an effect that will get you to do some additional things for the rest of your trading life, some additional things that will expand your ability to pull profits out of the markets for the rest of your life. So once again, guys, thank you for being here. And I'm not going to belabor things very much. So what I'd like to do is just jump right into, whoa, I don't even, oh yeah, I do have my phone nearby. I need that nearby just in case my team needs me and something goes wrong. So yeah, let's get started. What I'm going to do is we're going to jump right into the presentation here. And I'm going to go back to, boom, I'm going to go back to the start of things here. So yes, so traders, as you know, this is a masterclass on taking profits like a pro trader. And I want to welcome you to this event. And every single time I'm given the opportunity to speak from a mic or from a stage, I really do my best to make sure that I leave you with something that can potentially affect the way you trade and the way you see markets for the rest of your entire life. This is the mission that I've made for myself many years ago, and I'm hoping that I can continue to execute on that mission today. All right. Just for the benefit of those who have no idea who I am, guys, I'm the founder of an organization called ifundtraders.com. I am also the founder and creator of an organization that gained a worldwide renowned reputation in the trading industry all the way back from the 1990s, called Pristine.com. That company was initially called Pristine Capital Management, but when the .com era came on the scene, we changed our main name to Pristine.com. And I ran that company from my basement apartment in the Bronx, New York, initially, to becoming an international trading conglomerate over a 12-year period. I am personally a professional trader for nearly 36 years. I've actually been trading the financial markets for a total of 40 years, but 36 years of those are professional in nature. I was chosen in 1999 to be the inaugural keynote speaker for the entire trading industry. So the entire trading industry decided to come together to form an annual event where all of us would descend on a city every single year, and traders from all over the world, trading organizations from all over the world showed up. But I was chosen initially as in the first year and the second year to be the face of the entire trading industry. And I led those initial events in a very big way. And I'm very proud to have received that honor. I have trained thousands of traders worldwide, all over the world, traders. Organizations have sent me scores and scores of their traders to train, starting from all the way back in 1994 up until today. I am the author of 5 international best-selling books on the topic of trading the markets for a living. Now, these 5 books are written in 5 different languages: English, Spanish, Mandarin, Japanese, and German. And they continue to be the best-selling 5 books in the entire industry. I currently train over 5,000 plus stock traders, Forex traders, and crypto traders as well. I continue to be an international speaker for the trading industry worldwide. So organizations until this very day do invite me into their organizations to address their traders, to address their organizations. Exchanges consult with me to address their floor brokers and floor traders and things of that nature. This is the article covering me as the inaugural keynote speaker for the very first International Traders Expo, obviously held in the United States. This is an article of Barron's all the way back in 1998, dubbing me and my organization the #1 place to go to if you wanted the very best professional services and education for trading the markets professionally. And that was a huge honor. All right, this is a copy or a very quick image of some of my books written in different languages. And you can access those books, obviously, guys, by simply searching Oliver Velez books on Amazon. And as I mentioned, they sell all over the world today. And of course, these are my main social media networks where I really want you to follow me on a day-to-day basis. Why? Because I do spend a great deal of time every single day making sure that I put some type of material, trading material out for you to raise your level of market sophistication and take one additional step toward trading mastery. I do that on all of my channels. Instagram is where I'm probably Instagram and Twitter is where I'm probably active mostly on a day-to-day basis. But as it relates to my YouTube channels here, where you are, I make sure that 365 days a year, you receive something directly from me. And I spend a lot of time doing this. I am intent on leaving behind a legacy of very solid information and knowledge as it relates to trading, because I'm driven by the mission. I'm driven by this mission to do this because when I started all the way back in 1981, there were no resources. There were no books on trading. There were no clubs to go to. There was no Facebook. There was no trading groups. There were no mentors. It was simply a trial and error world. And it made the journey toward trading success very, very extraordinarily difficult. And I made a promise to myself that if I were to ever make it, I would do my part to leave behind a legacy or a body of work that helped individuals very much like me who did not have the riches and the resources and the contacts to basically get my start in a major Wall Street firm right off the bat with no experience. And so it is here on my YouTube channels where I am fulfilling that lifelong dream. And I hope you join me by clicking the subscribe button and clicking the bell in the right-hand corner to make sure that you turn all notifications on so that you don't miss a single piece of content. And I promise you from the bottom of my heart that every single day I'll put something out from the heart that is meaningful, that does not have fluff, that is not designed to sell you anything, but is designed to raise your level of market sophistication. And that is my promise to you. So if you would, guys, I know it's just the introduction here, but before we delve into the material, I would love for you to hit the like button on this video. It's going to help the algorithm. It's going to help this information get into the hands of more people who might benefit from it. And let's do that. Let's let the algorithm help spread this word just like you're receiving it. I want thousands of others to receive it. And you can help me out by just simply hitting that like button. Also, your comments, especially after the event is done, is extraordinarily important to me. So I ask that you do that, but only, of course, if you enjoy what I'm going to share with you today. But please, if you know you're going to enjoy what I'm going to share with you today, hit that like button today for me right now. Let's do it, and let's help this information get into the hands of as many people as possible. So let's go, guys. We're going to talk about how to take profits. This is the ultimate art, as I said. Every other aspect of trading should be more scientific, but it is the profit-taking part that is actually art-oriented. Now, there are 7 parts of a trade, and when I take on a trader to train them from the ground up, we actually delve into each part of a trade, each of the 7 parts. Profit-taking is one of those 7 parts. And this is one of those 7 parts that we're going to talk about and delve into today. Now, the first rule, we're going to break profit taking down into rules, traders. The first rule that I want you to be aware of is called the 30 to 50 cent profit rule. Now, this is not 50 Cent the artist. This is 50 cents in terms of dollars, okay? So let's get that straight. The 30 to 50 cent profit rule. Now, I want you to understand before I delve into this first rule that I am speaking predominantly from the eyes of an individual trader who's looking to make daily gains in the markets, daily profits. While this can be tweaked for a longer time period like swing trading or even investing, I'm going to speak today from the point of view of a trader who's looking to make daily profits, who's looking to make anywhere between $500 and $2,000 in a single day. All right. And so the rules are going to be tweaked for that style of market play. All right. And I will say this, if we're thinking from a charting perspective, we're thinking from a time frame of looking at a chart anywhere from 2 minutes to 5 minutes in duration. So we're looking at charts that are either 2 minutes in duration, each bar represents 2 minutes, or each bar represents 5 minutes, okay? All right, so I just want to get that out of the way first. Now, the 30 to 50 cent profit rule goes something like this. Look, assuming that you have bought an event that you're familiar with, events that my traders are familiar with are called elephant bars, tail bars, bull 180s, RBIs. We have a variety of events that I teach my traders to buy. Now, that's beyond the scope of our talk today. We're going to assume that you know when to buy. All right. This event today is going to assume that you know when to buy. But once you have bought an event that you have identified, and a mistake is to buy something that you can't name. All right. I do not allow my traders to buy something that they can't put a name on, because if you can't name what you're buying a thought, you're buying a feeling, you're buying an emotion. And these are the things that are not buyable when you are a professional. We don't buy our thoughts. We don't buy our feelings. We don't buy our notions. We buy specific detailed events that we know what they are before they happen. And so I'm assuming that you know your buy events. And so let's assume that you have bought your buy event. Profit rule number 1 is that you have earned the right to take partial profits after a 30 to 50 cent pop. I'm going to repeat that. Rule number 1, after you have bought your play, your identifiable event, you earn the right to take partial profits, not full profits. Please understand this. Partial profits. Never take full profits on rule number 1. Rule number 1, you have the right to take half. You have the right to take a third. You have the right to take a portion of what you have earned off the table after a 30-cent move or a 50-cent move. Now, listen to me. This is important to understand. When it comes to profit taking, it is never an obligation. These are rules, but the more appropriate word should be suggestions, really, because you don't ever have to take a profit. So these are rules that are not obligatory. This is a very important point to understand, traders. You are not obligated. You have earned the right to take a profit after 30 or a 50-cent move, but you are not obligated to take that profit. You can decide, right? You can decide that, you know what? I'm going to let this ride. I think there's more than 30 to 50 cents in this move right now, and I think I can take partial profits at a higher level. So I'm going to back off on this first milestone that I've achieved. Now, here's where this is important. I want you to understand that in this world, when you are rich, you have extra rights. I'm going to repeat that. In this world, I don't know about other worlds. All right. I'm always saying this, we have yet to do intergalactic travel. I'll wait for that. But until then, I only know this world. And in this world, when you're right on this planet, when you are rich, you have rights that others who are not rich do not have. This also applies in the trading world. When you are rich as a trader, you gain extra rights. You gain rights that you didn't have before you were rich. You gain rights that a trader who's not rich doesn't have. So what do I define as a trader who's rich? A trader who's first achieved 30 to 50 cents. Now, let's say you're playing 1,000 share lots, which are my traders are being trained to trade 1,000 share lots, right? So that's a $300 to $500 gain. Boom. In a very short period of time. Maybe it's 2 minutes, maybe it's 6 minutes, maybe it's 8 minutes, whatever. But once they achieve that 30 to 50 cent gain, that's when I consider them rich, which means that extra rights come into play. What is the right? The right to take some off. See, they didn't have the right at 5 cents. They weren't rich at 10 cents. They weren't even rich at 25 cents in the money. So 1,000 shares gets the trader $250 and they're still not rich. No, I define rich by this 30 to 50 cent gain. Okay? And so after that 30 to 50 cent gain, they're considered rich, which means that now they have gained a right to take a profit. They did not have this right to take a partial profit before, but now they're rich. They have a right to take this profit. They've gained an additional right, but they have not yet earned the ultimate right. What's the ultimate right? The ultimate right is to take it all. Okay? So they haven't earned that. They're baby rich. The full rich is you can take it all, but they haven't earned that. So they got the baby rich right now. They got the new rich, the new money, not old money, new money, not old money, the young money, young rich. Okay? All right, you got this. All right, guys, let's go. All right. So, now some might ask, well, Oliver, when is it appropriate for me to take 50 versus 30? Like, how do I know which one? Or is it just inside the range of 30 to 50? Well, you can range it. That's true. You can range it. So you can say anywhere above 30 up to 50 is my right to take a partial profit. Okay? But here's a very interesting guideline I want to share with you. I want to share this with you. Okay? Interesting guideline is this. If you have gained, if you are playing a stock that is under $50 in price, all right, I would suggest using the closer to the 30-cent rule, so 30 cents or more. But if you are trading significantly above $50, if you're trading a stock as $80, $90, $100, you should be using the 50-cent rule. That price is too high and has an alpha that is too high, a volatility statistic or rate that's too high to shortchange yourself with 30 cents. So I teach my traders as a general rule, if your stock is under 50, you're using 30 cents. If your stock is significantly over 50, so like if it's in the 60s or 70s, so let's use 50s as a whole. So 50 all the way through 50s, you can use 30 cents. Past the 50s, which means $60 and above, you use 50 cents. This will make sure that you are not taking profits too early. All right? So a 30-cent move in a stock under $50 is significant, but a 30-cent move in a $120 stock is not significant. Okay? So we have that $50 range as the midpoint. Anything from $50 range downward, 30 cents. anything from $50 range and above, 50 cents. So if I were to write that here for you, we're going to do 50s. Okay, these are dollars, dollar price ranges. 50s, this is your 30-cent range, right? And below. So you've got the 40s, you've got the 30s, and you've got the 20s. Now, I would not trade less than the 20s, just so you know. All right, I don't like my traders trading stocks less than $20. The volatility is not there. Those moves that are significant just take a miracle to happen. I don't like them. It becomes more of a casino down there. Okay, so 20s through 50s, we're going to use the 30-cent rule to take partial profits, and then anything above, all right, 70s, 80s, okay, and above, you're going to use the 50-cent mark to earn your first right, your first baby wealth right to take partial profits. Now, let's say, for instance, you take here 2 lots. So in the world of 1,000 shares equaling 1 lot, that means you take a 2,000 share position. All right, boom. This is a $35 stock, as you can see. Boom, $35 stock. So we're using the 30-cent rule. Once you achieve this 30-cent goal here, you have the right to take partial profits, which means that you can only take 1 of your profits, not 2. You have not earned the right yet to take the whole position off the trade. Now, guys, listen to this. There are times, right? There are times when a trader is very proud of himself and says, Oliver, had a nice $800 win today, gain today. Yeah, and says, I'm really proud of myself. And I said, okay, show me your trade. And we take a look at the trade, and I'm like, well, why are you proud? All right, you had 2,000 shares on this play, okay, and you took profits at 40 cents, and you're playing an $80 stock. So I know your result was 800, but you didn't earn the right to take profits. Why did you take the profits? And so the trader will say, but Oliver, it's $800. Do you know what I can do in my country with $800? It's like, I don't care what you can do in your country with $800. That's not the rule. You're still poor, under, right, 50 cents if we're dealing with stocks in the $80 range. This has nothing to do with the economics of your country. This has nothing to do with what you can do with $800. This has everything to do with you being a disciplined trader and doing what you set out to do, doing what you're supposed to do, doing what you promised your own self that you were going to do. You got into this trade knowing full well that the rule is I don't become a profit taker until 50 cents, and you took profits at 40 cents. So what's going to stop you from taking profits at 30 cents, then 20 cents, then 15 cents, then 10 cents, then 5 cents? I've seen this happen over and over and over again. So I'm strict with them. I get on them. I make sure that it's the rule. It's not the money. We don't trade for money. We trade to be true. Tell me you understand this. We don't, as professionals, trade for money. I was about to say something derogatory. I held myself back. Thank God. We are above that. It is not money that we're trading for. We're trading to be true. We're trading to get the trade right. We're trading to be disciplined. We're trading to be excellent in our craft. The money follows being excellent in your craft. The money follows those who follow the rules and do not let money influence them. Even in your life, you respect people that don't let money influence them, that they're principled individuals. We're going to be principled traders. We're not going to let the dollars control us. Just because I had $800, I break my rule? No, no, no. All right. Just because you give me $800, I kill my brother? No. Same thing. Money is not going to make us unprincipled, undisciplined traders. I need you to understand this. We're going to be rule-based. We're going to be civilized. Okay? All right, just so you know. Yeah, let's do this. So we've got the first rule out of the way. Keep in mind, there is no obligation to take profits. You do not have to take profits. Now, this is interesting as well. Let me just touch on this for a bit. When might you decide that it's not appropriate to take a profit? You might decide, traders, you might decide that, you know what? Here's a guideline for you. If you enter this trade, right, and you get that, boom, that 30-cent gain, it's a $40 stock, boom, you get that 30-cent gain like that, don't take it. It's too fast, it's too violent, it's too abrupt. This means that it's just getting started. It didn't struggle to get there. It didn't take it wasn't carefree. It didn't take its time to get there. It just got there in a bunch, which means that it's not even close to being tired. It's just getting started. It's vibrant. It's young. It's alive. It's got more. Don't cut yourself short if you get that right away. If you kind of get that normally, you have the right. If you get it slowly, you certainly have the right. But if you get it right away, almost like, whoa, that was fast, don't take it. There's a lot more left usually in that quick burst to your first profit-taking right. So that's a very interesting little tidbit. I would write that down. Don't let that one go. All right? Colombian coffee, the best. I love it. It's a little cold, but even cold, it's good. All right, let's go. I think we go to rule number 2. All right, already on rule number 2. I love it. This is called the 3-push profit-taking rule. Now, remember, guys, I'm assuming that you know when to buy. You know what to buy. But after you have bought what you know to buy, rule number 2 gives you the right to take profits after what I call 3 pushes. This is called the 3-push profit rule. Let's delve into it. Now, the 3-push profit rule states that after 3 sudden individual bursts of new highs in your profits, you earn the right, not the obligation ever, to take a profit. So what does this mean? What does 3 pushes mean? In fact, what is a push? If I were to give a push a sound, it would sound like this. Listen. Did you hear that? That's a push. All right. So a push would sound like you buy the stock, boom, and then at some point it does this. It just speeds up. It just picks up velocity. It just jumps. I mean, it doesn't do this. There's no push there. There's a grind upward. That's a push. That push is extra velocity. That push is extra momentum. That push is like, whoa. That push makes you say, yeah. Like, this doesn't really make you say, yeah. It's good, but it doesn't make you say, yeah. 2 cents, 3 cents. That's the push I'm looking for. So it's possible, traders, that you can grind higher without a push. You can become profitable without pushes. Pushes are those jumps. Pushes are those surges. Pushes are those extra velocity points that happen during a good move. All right? And those pushes indicate when institutions are really kind of hitting the stock. All right. It's not gradual. Boom, 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 boom. There. That's the sound. All right. Not. So know the difference. A rise is not a push. Any green bar up is not a push. That green bar could be slow and gradual, but if that green bar formed like this, that's a push. So there's a difference between a push and a green bar. There's a difference between a push and a move up. Okay? The push has velocity, instant momentum. Okay. Now, let's assume that you have entered your play here. Boom. You're protecting yourself here. I teach my traders, always protect yourself under the item that you have bought. So if we have bought this item, we're protecting ourselves under that item. Now, anything from our entry price, if we get, that's push 1, that's push 2, and push 3 right here, you have earned the right to take, you have earned the second right now. You can take it all. You see, remember the 30 to 50 cent, you earn a partial right. Here you've earned the full right. You are fully rich now. You can take it all. Here are your choices. You can take a portion, or you can decide, I'm not taking anything. I think this is higher. You have earned that right, traders. You are rich. And in this world, when you are rich, you have choices. When you are not rich, you don't have choices. All right? Now, what I teach my traders to do is something slightly advanced. Once push 2 is complete, my traders are taught that they can place an advance order up here before a third push materializes. So they haven't, some of the traders have an order waiting in third push territory in advance so that they're rooting the stock. Come on, baby. Come to Papa. Come to Papa. Come to Papa. Boom. Profit taking. Profit take done. Now, whether they do that on half or third or all of it is their choice. All right. So that's a very interesting point to know. All right. We got push 1. Boom. Push 2. Throw that order ahead of time into push 3 category and root your stock on. Come on, baby. Come on, baby. Come to Papi. Come to Papi. Boom. And there you go. Order filled in push 3 territory on one half of my position. Let's see what the other half does. Let's see if the other half can earn us more, as an example, or all of it. Boom, out. Your choice. This is the 3 push rule. Now, I have to give you some nuances regarding this rule, okay? Let's look at some of the nuances regarding rule number 2, the 3 push rule. There is something that I call the multi-bar slide that can make up a push. So remember I told you that a push sounds like this. A push sounds like this. So watch it. A push sounds like this. That's a push. Push 2. All right? But this is not a push. Nor is this a push. Nor is this a push. So you got 3 little inching up bars or slide bars. They're sliding to, they're not running to a new high. They're sliding to a new high. All right? These individually are not pushes, but if you were to stack those 3 together, they would make a push like this. You see what I'm saying? So if you can stack multiple little bars together enough to achieve the size of an average push in your stock, You can even take it on the slide. All right? Does that make sense? You got it, guys? Are you picking up what I'm laying down? A push is, but you can stack little bars together to form one push, and you've achieved the push. Okay? Got it? You're picking up what I'm laying down. As a matter of fact, let me just see. I want to see. Talk to me, guys. I want to see your comments. All right? I want to see it. I want to see you. Talk to me. I want to see you. Show me. Tell me you understand while I sip my coffee here. You got it? You understand? You're picking up what I'm laying down? We've got the second rule, the 3-push rule, and the multi-bar slide rule that can count as a push. You're picking up what I'm laying down? Guys, by the time we finish, you're going to know when and where and how to take profits on every single freaking play. It is not going to be vague anymore. It's not going to be like, I think I should take some profits, or it's not going to be out of fear. Oh my God, I'm profitable. I should take it before it disappears. None of that. None of that novice stuff. Do you understand? We don't play the markets like that when we're professionals. We don't be like, oh my God, I've got $200. I should take it before it disappears. None of that. None of this snatching at it before it's too mature, which is a very big mistake. Snatching at your roses too early when they're baby roses. Let those roses frickin' grow. Do you understand? We got to let our roses grow. We can't snatch at them so quickly. I got a 10-cent gain. That's too quick because your losses are going to be 30 cents. Right? Okay, cool. All right, cool. Awesome. We've got multiple more rules to cover. We're going to tighten this up. I promise. We're going to tighten your profit taking up here. All right? Let's go. All right. Let's do this. Love it. I freaking love it. All right. I want you to understand this slide very well. I want you to understand this point, this concept very well. That when we're counting pushes, each push must be higher than the previous push. Now, notice how if I buy this stock here, let's do a different color here. If I buy here, I get push 1 from my entry point. I get push 2, but notice how push 2 is actually higher than the high of push 1, you see? But notice here how this can't be push 3 because the high of this green bar is not higher than the high of 2. So the highs must be higher. This high is actually lower. So it can't count as a push. Now, I can have an order waiting up here in push 3 territory. Come to Papi, come to Papi, come to Papito. Boom. All right. But I have not yet earned the right to take a profit. Okay? Now, it's possible, check this out, guys. It's possible that after my entry here, I have achieved here, let's say 30 cents. So that's rule 1, but I have not achieved the right to take it all. So I take 1/2 here. But I'm now going for my ultimate right here to take it all, or to take half of the half if I like. But I can't take it here. So please Understand that every push must be a new high. This is not higher than the push 2, so it can't be push 3. All right? Push 3 would come here. Boom! You see that? That would be push 3. So it's not just green bars. Pushes are abrupt moves that are higher than the previous abrupt moves. Okay? All right, the very important point there. Very important point. Boom! Now that's a profit-taking right. Notice that even though this bar inches out the high of push 2, the bar itself is not a push. It's a. We're not interested in taking profits on baby little teeny incy wincy little tiny moves. We're looking to take profits on surges, momentum, jumps, violence, if you will. Abrupt, sudden, okay? Not, those aren't profit taking. Listen carefully. It's not profit take. All right? What is that? Really? No. That's where do it. Do it. Just don't spit on me. Do it. You know, I want to see you do it. Show it to me. You can do it. Type it in for me. That's what we're looking for. All right? You can do it. Show me. I want to see it. Let me see. I want to see it. Show me. I want to see you. Show me. I'm not moving until you show me. We can sit right here. Type it in. I want to see it. Type it in. No. There we go. I see it. Yeah. All right. I love it. No. Yes. Awesome. I love it. Okay. Yeah. All right. We got rule number 2 in the bag. Yeah. Okay. Now, let's talk about this little nuance. No peekaboo highs. I just talked about that. Nope. We want. This is not a profit take, but the next one can be. All right. So I might throw an order up here in advance in third push profit taking area and just route the stock on to reach my play. Come to Poppy. Boom. Order achieved. Order hit. Nice. Sometimes having that order in there in advance is better. You get in line at that price earlier. All right. You also, if you're a professional trader, you earn an extra fee if your orders are placed ahead of time. Did you know that? You earn an extra little profit, an extra little fee called a rebate, but you have to be professional, not retail. But if you're a professional trader, you earn that extra fee for placing orders in the market ahead of time. And so just by placing that order up there at 3, my traders get an extra $1.25. It adds up, guys. All right? For every 1,000 shares if the order's placed there ahead of time. And so they would get this, the gain in the play, boom, plus the extra 125. Okay? Now think of after 300,000 shares traded in a few days or 300,000 shares traded in a month. 300,000, all right, shares divided by 1,000 times 125, it adds up. It adds up, guys. So this extra fee is beautiful. All right. When you place your order in the markets ahead of time as a professional, as retail, they take that fee from you. So when you trade on Robinhood, Robinhood gets the $1.25 and does not pass it to you. Okay. They take it. You get it really, but they take it. So retail does not get it because the brokers take your $1.25 every 1,000 shares. The professional gets that passed to them. All right, very different. Okay, so no little peekaboo new highs. All right, I told you we need a green bar to supersede the high of the previous bar, but not in a peekaboo fashion. We still need that bar to be not a little tiny insignificant bar. All right, so in this case, boom, we got it. All right, we got this marginal peekaboo new high, but we're not acting on that. We're acting on this one. So there's a complete 1, 2, not that one, 3. 3 pushes done, complete. Now, remember, guys, you may have gotten an opportunity to take at 30 or 50 cents here. Remember the first rule. Maybe you took half there or 1/3. And you're taking half of the half to 1/3 of the half or all. 1/2, 1/3, or all. Remember, you are rich. It's your choice. If you don't, look at this asterisk here. If you don't take it all, and you decide to take none, let's say, you say, wow, Oliver, no, I like the velocity with which my third push was achieved. I think there's a 4th, 5th, and maybe a 6th one. I'm going to hold on. That's your God-given right as being a rich trader. Congratulations. Just don't lose this bar. Boom, out. Don't lose more than that bar. Don't let it drop down here. You understand? So protect yourself under the bar that gained you your wealthy or rich rights. Okay? So if you're going to try to see if there's another push and another, it's fine. Just don't lose the bar that earned you the right to be rich. Don't go back into being poor. Tell me you understand this. Don't become poor again. That's it. You can hold on. Just don't become poor again. This bar made you rich. Don't become poor again. All right? That's a general guideline. Guys, are you writing this down? Do you understand how just what I explained there can help reward you for the rest of your trading life? Just not losing the bar that made you rich. That rule right there, done forever, will reward you forever, will protect you forever. It's crazy how one little thing can have such a lifelong positive effect on the way you trade, your level of professionalism. I'm sharing, these things sound basic, but they're extraordinarily powerful. And they bring clarity to your market play. Do you understand what I'm saying? Like, how many players are actually crystal clear throughout the entire trade? Very few. There's no clarity. There's usually confusion. There's usually guessing. There's usually fear. There's usually hope. There's usually, I don't know. That's not us. All right. That's not, if you're mine, that's not us. All right. We're crystal clear. We know what's next. We know I have no business thinking of profit taking right now. I've got one push. I've got no business thinking of profit taking right now. I've got two pushes. I got my order waiting up there at third push, but I'm not going to be, oh my God, should I take it? None of that, because I know I haven't earned that right yet. I got 20 cents. The novice is thinking after 20 cents, wait a minute, should I risk this disappearing, or should I take it, or what should I do? Not my traders. 20 cents is nothing. You understand that? Do you understand that the first rule is teaching you that you don't have anything at 20 cents. You don't have anything at 29 cents. You don't have anything at 28 cents. You have nothing. You are nothing. You have nothing. Your trade is nothing. Stop giving the trade a status before 30 cents. Why is this important? Because if you start taking 20 cents gains, your average loss is going to be larger than 20 cents. So where does that put you? You take 20-cent gains, but take 35-cent losses? Really? That's a recipe for disaster. So rule number one protects you minimum 30 cents. All right? It speaks to the notion that you don't even really have a profit until you achieve 30 cents. And in certain price ranges, you don't have a profit until you achieve 50 cents. This solves a huge problem that novices in the market have. When have I achieved a takeable profit? And when am I taking prematurely? Because if I become a premature profit taker, I'm a guaranteed loser because my losses will dwarf my premature gains. All right? All right, so write these things down. Take these notes. They're life-changing. And I've never really done this with this type of detail before for my general following. So I hope you appreciate it. All right, let's go. All right. Now, rule number 3. Yes. Already on rule number 3. I love it. The igniting bar profit rule. This is an important one. Oh my God. All of them are important, but wow. This one right here, this one right here. Whoo. Okay. The igniting profit rule. I get excited. All right. No prior red bar rule. Guys, look. If you achieve a third push, but the bar before it is a red bar, you don't have a third push. Uh-oh. Did you hear what I said? All right, I'm going to repeat that. If you have achieved a third push, but the bar before your third push is a red bar, it is not a push. Uh-oh. Yeah. We don't take profits on green bars that are preceded by red bars. I'm going to repeat that. We don't take profits on a green bar if the bar before the green bar is red. No, 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 no. We can only take profits on a green bar if the bar before the green bar was green too. I'm going to repeat that. We can only take profits on a green bar if the bar before it was a green bar. If the bar before it is a red bar, nope, nope, nope. But Oliver, nope. But wait a minute, nope. I've got nope. What if nope? It's nope. Nope, nope, no, 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 no. No, 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 no. Okay. You get my point, right? No profit taking on a green bar that is preceded by a red bar. Let me explain to you why. A red bar, traders, is a pause in your momentum. A green bar is a continuation of the momentum, but a red bar is a pause in your momentum. Your stock has had the ability to rest. Your stock has had the ability to catch its breath and take off again in the race. Why are you selling a refreshed runner? Why are you cutting short a worker right after his break? Why are you killing a trade after it has gotten an opportunity to step back, to leap forward in a more aggressive way? We want to take profits on tired runners. We want to take profits on stocks that are out of breath because they've been running multiple races in a row. This green bar is a race. That green bar is a race. That green bar is a race. That green bar is a race. The stock is tired. Oh, take the profit. But when the stock has had an opportunity to rest, take a glass of water, catch its breath, and then boom, take off again. And then you want to kill it? Does that make sense? No. So we don't take profits after rests. We don't take profits immediately after red bars. Red bars are rests. Red bars is a slip of water. Red bars are catching, the stock's catching its breath. Tell me you understand this. No profit taking on a bar that is followed, that is preceded by a red bar. That bar is a rejuvenated stock, a rejuvenated runner, a refreshed runner, a refreshed stock. It wants to run another multiple leg race for you. Tell me you understand. I'm not moving until you tell me you understand. I got to see it. Prove it to me. Write it down. Prove it to me that you understand this. Tell me. I'm going to sip my cold coffee again. Do you understand this? I want to know. I want to know. This is boss trade. This is Godfather trading. Do you understand? It's Godfather stuff. Godfather trading. Boom. I know I'm crazy. I get it. I get it. My kids tell me all the time, Oliver, Daddy, you stopped growing up at like 27. It's like, no, are you kidding me? Stopped growing up long before that. All right. All right, cool. All right, cool. Awesome. We're not even done. Guys, you see how this is tightening up? Do you see how this is tightening up? The rules are going to tighten your activity up in profitable territory. They're going to bring clarity to the art part of the game. If you don't know how to take profits, everything else is for naught. Your stock picking skills are for naught. Your risk management skills are for naught. If you constantly let your profits disappear when you should have taken them, everything's for naught. If you're constantly taking your profits too quickly, not letting your roses grow, but you let your weeds grow, but you don't let your roses grow, everything else is for naught. If you do not know when to take half or part and not all, everything else is for naught. The profit taking is one of the crown. The profit taking skill, this art, is one of the crowning jewels of true trading professionalism. And very few people have any guidelines regarding profit taking except their gut. I think I should take a profit now. I think they're moved by money. I've got $200. I'm taking it. Nothing's rule-based. There's no governance. There's no discipline. There's nothing specific and detailed and professional behind their actions. It's just a feeling. I think I should take profits. I feel I should take profits. I've got $200. It's not trading. That's being a wishy-washy, washing gambler. We need things to govern govern our actions. We're civilized traders. We're governed by principles. We're governed by guidelines. We're governed by rules. We're not just, I think today, because you're going to think differently tomorrow. You're going to think differently the next trade. You're going to think differently. You're going to feel differently next week. You're going to feel differently tomorrow. You're going to feel differently on the next trade. You understand? Your feelings are unreliable. Your thoughts are unreliable. You should not be trading off your feelings. You should not be trading off your thoughts. Your thoughts are your worst enemy. Your feelings are your worst enemy. These things override our thoughts and feelings. These guidelines, these rules govern intelligence. It's high noon. It's high time for you to stop allowing yourself to be governed by every little wiggle in a stock, every little tiny bar, every little tiny movement. Oh my God, yay, oh my God, yeah, yay, oh my God. Like, come on. Rule-based trading, discipline, principle, civilized traders. We're going to be civilized traders. What's a civilized nation? A nation that's governed by guidelines, a nation that's governed by laws, a nation that's governed by rules. What's a civilized trader? A trader who's not at the whims of his thoughts, at the whims of his feelings, at the whims of his wishes, and at the whims of money. Who respects someone who will do anything, no matter what it is, for money? Who respects that? No trader should be respected just because they act from the base of money. But Oliver, I had a profit. So what? You had a profit. You weren't supposed to take your profit then. So what? That means you can be bought. That means your principles can be bought. Your rules can be, I can make you break your life rules by simply handing you a few dollars. That's who you are as an individual. That's your level of being a principled person. That a few extra dollars gets you to do anything I want. You are a slave if you're not governed. You are not the master of your own fate if you are not governed by, if you are governed by your thoughts and your feelings and not intelligent guidelines. What we're talking about here today are intelligent profit guidelines that has nothing to do with money. Well, one of them has a little bit to do with money, 30 to 50 cents, but that's not really money. That's just a statistical jump that you have the right to act in, but it's rule-based. And so, yes, it's time, traders, to bring a rule-based, structured approach to how you realize your gains in the market. And we are covering this today. This is priceless. I know that some of you might look at that and say, well, Oliver's being egotistical, but it's not. I'm just saying that I've got 36 years under my belt as a professional trader. I am telling you that this art of taking profits is one of the crowning jewels of true mastery. And so few people know how to do it. But after this session, you will. Okay? Let's do it. Let's go. I know I keep pounding the table on this, but it's that important to me, guys. It's that important. And it should be to you as well. All right, let's go. Let's go. So we got rule 3. No taking profits on a green bar that is preceded by a red bar, but you can take profits on the next one. You see how there's a green bar before it? You can take profits on any green bar that has achieved 3 pushes, but as long as it has a green bar ahead of it. So in reality, it's possible that you will ultimately be taking profits on 1, 2, not 3, but 4 pushes because of this rule. This rule might extend your profits to a 4 push rule, really. Okay? Beautiful. Wow. You guys might have to watch this more than once just to get it all in, you know? Nothing wrong with that. Repetition has a huge value here. Repeat this, repeat this, repeat this, repeat this until it becomes second nature for you, until you're no longer thinking about it. It's unconscious competence, that it's not something you have to think about during the trade. It's something that you simply do during the trade. All right, rule number 4, the new high profit rule. This is important. Oh my God, is this important? Whew. They get more important as we go. Rule number 4, the new high profit rule. Look, what this rule states is that if your stock drops, you see, you need the drop. See, we were talking about scenarios before this that didn't really involve a significant drop. If your stock on the way to 3 pushes drops first, so you got push 1, you got push 2, and then it starts dropping. Now look, if the drop does not penetrate the 50% mark, 50% of what? The initial move up from low to high. So we measure this. See that move? Now, cut this in half, more or less. All right? If the drop does not greatly penetrate the top 50% of this power move, then you're looking to take profits once we clear the high. You see, that's the high now. Now we have to clear that. Not a peekaboo high, not peekaboo. No, we have to clear it decently, okay? Now, notice the green bar before it, so I'm okay. All right? Now remember, guys, even if this bar achieves the new high, if there's a red bar before it, I can't take the new high. I can take the next green bar, but I can't take the green bar new high if it has a red bar next to it. All right? So in this case, I have a green bar, I've achieved a new high, and I have a green bar before it. Boom, I have a right to take profits on the new high. So look at this, guys. Here's what I'm saying. Stock moves up, pulls back, stays in the upper 50%. Now, your profit taking is up here. Boom! As long as there's a green bar before your profit taking bar. I'm gonna draw that again. All right. Stock moves up. Boom. Let's say you bought here 2 lots. Let's say here you sold 1 lot based on rule number 1. Let's say that's 50 cents. You took 1 off. Stock pulls back. You still have 1. Stays in the upper 50%. Now moves high. Now you're going to place, if you want to place it ahead of time, that's fine. You can place an order up here, but that's your profit taking territory. You need a new high. All right. You need a new high. Boom. You've moved into that new high territory. As long as there is a green bar before it, you have the right. New high. You pull back. New high territory. Boom. As long as there's a green bar before it. So it's not pushes anymore. It's can I cross the new high? That's the whole point of this rule. Once you get a pullback, we stop counting pushes. Pullback, it's not pushes anymore. Now it's new high territory. Can I get there? Can I get there? Come on. Come to papi. Come to papito. Boom. There's my new high. So it's pushes here. Pushes. And new high here after a pullback. Pullbacks turn us into new high profit takers. Now, everything I'm explaining to you is applicable in reverse. So it's always best to learn from the buy side, but just understand everything is applicable in reverse. All right. So after a pullback, we don't do the new high rule anymore. We adopt a new profit-taking rule, which is the new high rule. The only caveat is that there must be a green bar before your new high profit-taking bar. All right? That's the new high. Now, if your stock makes the new high but has a red bar before it, you cannot take the play. You can place an order ahead of that bar, assuming and hoping that the next bar achieves your profit taking. But because that green bar is preceded by a red bar, you still don't have the right, even though it's a new high, because it's coming out of a rest. It's coming out of a water break. It's still fresh. It has great odds of following through and producing multiple other green bars. Let's not shortchange ourselves. All right, beautiful. All right. Nice. Now, one more nuance. Check this out. This rule is called the 50% break rule. So remember, I was telling you that if your stock does not break, so let's say your stock rallies, pulls back, but stays in the upper 50%. So here's your upper 50% and here's your lower 50%, right? Here's your upper 50% and here's your lower 50% of this move. We cut that move in half. Right? We're going to look for a new high to take profits, right? But what if it breaks the 50% and then starts turning from there? Well, we have a different rule for that. And let's look at it now. If your pullback significantly violates the 50% mark, boom. Now we revert back to the 3 push rule. 1 push, 2 push, 3 push, boom. It's no longer new high rule. We go back to the original 3 push rule. So see, look, if you don't break the 50% rule, it becomes the new high rule. But if you break down below 50%, you go back to 1 push, 2 push, 3 push out, whether you get a new high or not. All right? Very slick, very sophisticated. That's sophistication there. Sophistication. That's one pinky sophistication right there. Sophisticated. Sophisticated trading. Fancy. Oliver, that's fancy. Yeah, break that 50% mark by a strong amount. Not a peekaboo break, that doesn't count, but a strong break of that 50%. We go right back to, okay, this drop was bigger than expected. I'm now going back to boom, 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 3 pushes and out. All right. Tell me you understand this rule. This is an important one, guys. This is an important one. Tell me you understand it. I want to see you. I want to see you comment to me, okay? Let me know. You guys got that? That's that sophisticated 1 pinky rule. That's the 1 pinky. That's fancy. It's fancy. Fancy. Awesome. Okay. I told you that we would really be we'd really be ripping this topic apart and going, I've never gone inside of it like this with you. I mean, with my traders all the time, but with you, I've never done it, you know? going inside, break the profit taking part by part. I've always set out traders to train traders in a way where they know in advance what to do for every possible eventuality. This is important to understand, all right? That what if a stock only has 9 things that it can do? It can only do these 9 things over and over again. But what if you had a response prepared in advance for every one of the 9 things? So after you buy it, it has 9 possibilities that it can do. And you have these possibilities numbered 1 through 9. But underneath every possibility is a response for that possibility. And so that now trading has nothing to do with what you think. Trading has nothing to do with what you feel at the moment, what someone else is saying. Trading is now just matching. Possibility number 3 is happening. Let me pull out response number 3. Oh, wait a minute. Now possibility number 8 is happening. I already prepared for that. I already have a response for 8. Let me pull out response number 8. And so now it's like a freaking trading monkey, but in a good way, right? Good monkey. You're a monkey, but in a good way. You're just matching. You're matching like a monkey. Oh, 2, got 2. 4, okay, 4. This is opportunity. This is possibility 9. Boom, match 9 with 9. Match 3 with 3. And I've always set out to break the trading equation up into these pieces and to have a response for each piece. And what this does is it stops the trader from analyzing. Do you realize that your analysis is the problem? Your thinking is the problem. Your analysis in the middle of a trade. It is never the time to analyze in the trade. The analyzation is before the trade. That's what builds the plan. You don't plan a war in the war. Do you understand? You don't plan for a championship football game in the championship football game. All the plays must be already designed. All the plays must be practiced. All the plays and all the responses should be perfected already before the championship football game. You can't go to the championship football game and say, let's analyze. Oh, let's analyze our play. Really? You're going to lose. No, you're going to get freaking killed because the other team did analysis in the locker room months before today. You don't analyze in a trade. You respond in a trade. That response without a thought, that response without a feeling, that response without the need to analyze has come from your preparatory work before the trade. This, what we're covering today, is preparatory work before the profit happens. There's no profit to take today. There might be a profit to take Monday, but you will have already prepared for the profit by having these rules in front of you. And so when you get your 30 to 50 cents, you know what to do. When you get your 3 pushes, you know what to do. When you get your new high after a pullback, boom, you know what to do. No thinking, no analysis, no guessing, no wondering, no rolling dice, no rolling bones, no calling up the psychic hotline, no asking mom, what should I do? None of that novice nonsense. We analyze and prepare today for Monday. We're preparing for Monday right now so that you know exactly how to play your championship game on the profit side Monday morning. Yeah. Are you picking up what I'm laying down? Am I boring you? Is this boring to you? I hope not. All right. That's right. Okay. Let's go. We're not done yet. We're not done yet. I see we've got some angry people in the comments. I love to make certain people angry. I love it so. It's just every now and then, life delivers these little gifts. They may not be tremendously, they might be exceptional gifts, but every now and then, just the extra cherries on top of your sundae are just so delightful. I just love these special delights when I anger the haters. I love it. It's like it's the cherry on top of life. We have to cherish those moments. I love it so. Okay, let's go. Now, let's summarize, right? Let's summarize these profit rules. Okay, let's summarize these profit rules. Love it. Putting it all together. These are the main ones, okay? The main profit rules, there are 3 main profit rules. Now, we covered 5 rules, but each one of those the other 2 were sort of like refinement rules of these 3, okay? So look at rule number 1 here, or look at the first profit-taking rule. This is your 30 to 50 cent rule, okay? Wherever you achieve that, is it possible to achieve it even in the bar? You buy here, and can you even get that 30 to 50 cents in the same bar? Of course you can. All right? Now remember, 30 cents below the 50s, 50 cents or more above the $50 price stocks, okay? Now, so that's rule number 1. But remember, you can only take partial. So a third, I would not go beyond a half, actually. A third to a half of your profits can be done on rule 1. Rule number 2 is when you get the 3 pushes. 1, 2, 3. All right? Here's where you earn full rights. You can take it all. You can take a third. You can take a half. You can take nothing. But if you take nothing, don't lose what has made you rich. Okay? Don't lose what has made you rich if you decide not to take it all. Okay? Now, we have the third main rule, which is after a pullback, as long as we stay in the top 50%, all right, it's the new high. Remember, if you pull back too deeply, we go back to the 3 push rule. All right? But if you stay in the top 50%, you revert from the 3 push rule to the new high rule. Now, remember those wrinkles. No peekaboo new highs. All right? No taking profits on a green bar that is preceded by a red bar. Those are your refinement rules. But these are the 3 ways that we take profits. 30 to 50 cents, 3 pushes, new high after a pullback. 30 to 50 cents, all right? 30 to 50 cents, boom. 3 pushes, boom. New high after a mild pullback. Mild is in the upper 50%. All right, we'll repeat that again. 30 to 50 cents. Boom. 3 pushes. Boom. New high after a mild pullback. 1, 2, 3. These are your 3 main rules that will govern your play in profitable territory. Oh, wait a minute. Did I not turn us back here? I didn't turn us back here, guys. I'm so sorry. Look at that. All right, let's go back. There's no problem. We didn't miss anything. We didn't miss anything. All right, let me go back and do it again. Nobody told me. Nobody called me. All right. So we're going to summarize these profit rules again. Let's do it again. All right. We're going to summarize these profit rules again. All right. There are really kind of, I've laid out 5 rules, but these rules are the 3 main ones that I want governing the vast majority of your activity in the profit territory. Okay. So here we go. Here we go. All right. The 3 main profit rules. Okay. Rule number 1 is your 30 to 50 cent, 30 to 50 cent profit rule. Okay. Your 30 to 50 cent profit rule. That's going to be the first one we deal with. 30 to 50 cents. All right. Now, remember, with this rule, you're taking 30 cents if you're 50s and below in terms of the stock's price. If you're above the 50s, like 60s, 70s, 80s, 90s, 100, you're going to use the 50 cent rule. All right. So price is a determinant here. Okay. Now, one thing that's very important is that you only can take 1/3 to 1/2. I would not do more than 1/2 after achieving the 30 to 50 cent rule. Very important. I would not be taking 3/4 or anything like that. Up to 1/2. Less than 1/2 is okay. Up to a maximum of 1/2 on this rule. Don't cut yourself too short. All right. Then there's the second one, which is the 3 push rule. 1 push, 2 push, 3 push, boom. So we can take a profit here on 30 to 50 cents. We can take a profit here on the 3rd push. Now, here is where you earn full profit rights. You understand? You earn full profit rights here. You can take 1/3. You can take 1/2. You can take 2/3. You can take it all. You have full rights. You are rich here. Do whatever you like. If you don't take it all, don't lose what made you rich. You see, you became rich with the 3rd push. If you take partial profits, don't lose more than what made you rich. So, boom, you're out of the rest there. You see? Don't lose what made you rich. Don't go back to being poor again. Don't go back to poverty. Don't go back to the beginning. All right? That's the only caveat. But there are going to be times when you don't want to take everything here because of the way this bar got you there. And if it got you there like it's still a young chicken, if it got you there with a certain amount of power and velocity, there's probably more left. If it struggled to get there, maybe not. But if it got there as if it's not even close to being tired, it might have some more velocity left in it. Okay? All right. So we've got rule number 1, 30 to 50 cents. Boom. Rule number 2, 3 pushes. Boom. And main rule number 3, new high after a pullback. After a pullback that stays in the upper 50% of the previous move from low to high, we revert to what's called the new high rule. As long as the bar before the new high is green, you have a right to take the profits there. Boom, new high. Pullback stays in the upper 50%, new high. Boom, pullback stays in the upper 50%, boom, new high, take a profit. Pull back, break significantly below the 50%. We go to pushes again. 1 push, 2 push, 3 push, and out. So here are your 2 scenarios here. We get 2 pushes, not 3, and then we drop. But we stay in the upper 50%. Boom, new high. We have a right to take a profit. Scenario number 2. We get 2 pushes, not 3, and then we drop and significantly break the halfway point. Boom, now we move back to pushes. 1 push, 2 push, 3 push, out. And there you have it, traders. You've got the 3 main things that will govern how you take profits. Now, remember, I did cover 5 rules, but the other 2 rules were more refinement rules, like don't take a profit on a green bar, right? Don't take a profit on a green bar that is preceded by a red bar. I made that a rule so that it would be accentuated, but it's really more of a refinement of these 3 rules. Don't take a profit on this bar if what's before it is a red bar. You see? That's a refinement. Okay? So, you've got your 3 governing rules. 30 to 50%, 50 cent. Take up to a half. Boom. 3 pushes. Take up to all of it if you like. Boom. New high. After a pullback that stays in the upper 50%, take all of it if you like. Boom. Break significantly below. Go back to 3 pushes. Boom. And there you have it, traders. Repeat, 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 repeat. And so, as I've mentioned, these things are going to help you get beyond some of the novice's biggest problems. When to consider a gain a takeable gain. That is at the core of a lot of traders' problems. So not knowing, not having a structure for when is a gain a real gain and when is a gain an insignificant gain to ignore, not having a structure for that, they randomly take at any gain, 5 cents, 6 cents. So they get 10 cents and then they start seeing 10 cents become 8 cents, become 6 cents, become 5 cents, and they take 5 cents. Wrong. Now you know I haven't achieved 30 cents yet. What am I doing? That's nothing. I'm using my original stop. That gain's not worth protecting. Okay? They don't know how, when a stock starts running, they don't know how far should I start to think taking some off the table at least. 3 pushes. You're going to know. They don't know. So they take 1 push. Sometimes they don't take anything on 3. It's 3 pushes and they don't take anything. Sometimes it's 10 pushes and they still don't know. Like, you're going to have guidelines that, oh, I've just earned my right. You may not exercise that right, but you know when you've earned that right. And then the pullback. This is what gets so many traders in trouble. When is a pullback okay? When it stays in the upper 50%. Don't worry about that. That should shoot to a new high. If it significantly breaks the 50%, we have to adjust now. Let's adjust back to getting out on 3 pushes. Wow. This is planning your scenarios ahead of time so that when any of those scenarios occur, you don't have to think. You don't have to analyze. You don't have to wonder. You don't have to guess. You've already, I know this. My response is this for that. My response is this for that. Pull back, new high, boom. Pull back too deeply, out on 3 pushes. 1, 2, 3, out. Okay. Get quick 50 cents. Maybe I hold off. Not so quick. I'm going to take up to half, right? 3 pushes. Take half if you like. Now I'm going to make sure I don't lose what made me rich on the other half. This is professional trading. This is professional profit taking. Now, do I have time for this? Do I have time? Let's see. I do. Let's take a quick look. I don't have a lot of time. Let's take a quick look at some real life examples. Okay, shall we? Let's do that. Yeah. Love it. Real life examples. If I can. Let's see. Yeah, here we go. Okay. There's some real life examples here. I want to, it's interesting that I have Microsoft here. This is a good one to take. This is a good one to do. So let's say, for instance, my traders know that in this play here, you see this green bar, right? You see that fat green bar right there? Okay, look. So this stock has moved like this, right? And this is the 20-period moving average. So my traders know that after a solid move like that, the first pullback toward the 20-period moving average is buyable. All right? It's buyable. Now, what many of my traders would do was they would buy on the very next time a green bar took out a red bar. So see that red bar? This green bar takes out the high of the red bar, so they're buying there. Boom. That move above that green bar right near the 20-period moving average is their play. All right? But that's not what I want to point to. Let's point to this one. This is another play. Now, you see where this green bar breaks out above this sideways movement, right? Boom. That's a breakout play. So some of my traders would also jump right into this bar here on the breakout. Boom. Their protection would be under the bar. All right? Okay? Now, if they bought in the lower part of this bar, they would actually get push 1 right here in the same bar. But you see the second bar here? That's not a push. Okay? And you can take this one too as push 2. Let's call that push 2. So we've got push 1 and we've got push 2. But look at this one. Now my traders would not be allowed to take that one. Do you know why? Because of the red bar. Now I know I told you that if a red bar is next to it, you can't take it. And you say, well, Oliver, I see a green bar next to it. But the green bar is not higher than the red bar, so the green bar doesn't count. That's just like a red bar. And so, because this is coming out of a rest, it's not takeable. The next one is. Boom. And that's how that's very calculating. Do you understand? That's very calculating. It's not a guess as to when I've earned the right, not the obligation to take my profits. All right? And so that could be an example. If the trader took the play here, this is not significant enough. That's not that's like a this is not a push. So let's cross this one out. We know the red bar is not a push. Let's cross that one out. This is a push. 1. This is a push. 2. This is not a push, but this one is. Boom. Their profit taking comes there. And so it's not based on, I'm up $600, Oliver. So what? We are not governed by money. We are governed by rules. We are disciplined traders. All right. Look at this play down here. So Microsoft has a nice little rally and pulls back. Now my traders know that if you come back to, see this fat bar right there, that fat green bar? If you come back to the range of a fat bar, it's likely to turn. So there was that fat bar. We went up and then we came right back to the top of that fat bar. Beautiful. Now, when are they going to strike? They're going to strike when the green bar takes out the red bar. Boom, there's their entry right there. Now, I would say this is push 1. Push 2, okay, because this is a $300 stock. So, and push 3 up in this area. No worries, right? Now, this can also be looked at as the new high here. So see how this is the pullback? Your entry from here to here, as long as your entry is in the top 50% of the last power move, all right, your entry price is in the top 50%, you can use the new high rule to take profits. Now remember, you don't have to take profits. You have earned the right to take profits. So this could be your pullback as well. Pullback, boom. Now, my profit-taking zone is up here. Boom! Now, let's say I do take some off the table. I take half off the table, and I ride this baby out as long as I don't lose my status as being wealthy, as being rich, back under the new low, back under the new high. I don't want to lose the new high. All right? And what you can do is, what some traders do is that they start a new count, which is really interesting, right? So let's say, for instance, they took on the new high here. So they start the new count. They can't take a profit there because of the red bar. They can take a profit there because it's a green bar before it. But they can't take a profit there because there's a red bar before it. But they can take a profit there and there and there. It's their choice. They're rich. I don't care which one they take a profit on. Boom, they re-enter. They can't take a profit there because of the red bar. They can't take a profit there because there's no new high. But they can't take a profit there because that's not 3 pushes yet. See, the game starts again. The game starts again here. All right? 1 push, 2 push, nope, 3 push, boom. Beautiful, beautiful. Let's go to a stock that I'm constantly trading. Well, I've been trading for 18, 19 years now, actually. All right. You could do something like this, like, okay, look, here, remember I told you as you come into, see this fat green bar here? As you come back into the range of a fat green bar, you will tend to see a reversal. So we come back into the range of this fat green bar, but we're looking for green to take out red. Boom, green takes out this red. Look at that red there. Look at that red. And green takes it out. So my traders look to enter here. Boom. Now, they get push 1, they get push 2, and they get push 3. Boom, they can take a profit. All right? Boom. Nice. Now, why would I encourage my traders? Why would I say, if I were reviewing this trade of my traders, buying the green, eliminating red in the range of a fat green bar, beautiful. Buy, 1 push, 2 push, 3 out. Why would I want them to be out on 3 pushes and disappear for a while? Because look at the deepness of the pullback. Remember I told you that when a stock, here's the power. when a stock significantly breaks the halfway mark, see here, you're looking for a new high, but here you're looking for 1, 2, 3 out. Do you see that? You see how beautiful that is? That's a beautiful law. That's a beautiful rule. Now it's yours. All right, now it's yours. So, knowing when to go for that new high and knowing when not to go for that new high and getting out early on 3 push pops are very, very important, guys. Very, very important. You know? Very special stuff here. Very special stuff. What moved here? What moved here? All right. Look at here. Look. You're buying this green bar. It's clearing red. Boom. Okay. And you get, maybe you don't even get here. So let's assume that you buy here and there's not enough but there's 1 push here. That's 1. You get 2 here, but then you get the drop, the pullback. All right. But then you get your 3rd push there. Now, why is this one a 3? Because there's a green one before it. You see? And so you get your 1, 2, 3. Now, there's a reason that I can't go into in great detail why I've chosen the number 3. The markets have a strong tendency to actually reverse on 3. And you'll see it a lot of times, 1, 2, 3, drop. All right. And then you have plays like this. See this green bar here? Boom. Clearing the red. Now, you see these little bars? These are not pushes. But you can combine them to be pushes. Remember that? So if you bought here, your first push is this. That's push 1. Here's push 2. You stack the little gradual bar moves up, and here's push 3. Boom. Uh-oh, here's another one. Fat green bar, eliminating red. Boom. Push 1. Nope. Push 2. All right. There's a green bar before it. That's fine. Not this one. Push 3. Boom. You see that? That's beautiful. So I bought this bar, but I got my first push here. Now there's nothing. You see that green bar? Nothing. But then boom, there's my second one. Now there's nothing here on this green bar because there's a red bar before it. And then 3, boom, take a profit. Gotta love it. Here we go again. Boom. All right. We can look at this as push 1. Here's push 2. All right. Now remember you 280 cents. So you could have taken your 50 cents out of this already. So you got some change already in the play. Remember, 50 cents on 1,000 shares is $500. So you've collected $500 on 1,000 shares here already. Now on the, well, you have unrealized $500. Maybe you take 250 of it. All right. Maybe take $250 off the table, and now you're going for your 3rd push up here. Or you're going to get stopped out. It's okay. That happens every now and then. But this is profit taking, guys. Here's intel. Here's another one. Look at your move up, your pull back, and your move to a new high. Boom. You're taking new highs. Look at this clearing green bar above the red. That's your entry. Boom. Protect. I would say these are too small to be pushes, but the whole thing is a push. Push. And then these 3 are the third push. Do you see that? Push 1, push 2, and push 3. Boom. And look at the drop after 3. Markets have a tendency to drop after 3. All right. Want to start again? Boom. Green takes out red. 1 push, 2 push. Now let's place that order up there and see if this can come to papi. Come to papito. Boom. And there you have it, guys. I can show you this ad nauseum. Do you understand? I can show you this over and over and over again. And that's actually part of your training, to have you experience these 3 ways of taking profits over and over and over and over again until it becomes second nature. So first you start off with it written down in front of you, and you might have to refer to it. Wait a minute, which one? Which way am I supposed to be taking profits now? Okay, 3 pushes. I only have 2 pushes right now. And you might need the piece of paper. You might need the plan written in the beginning. There's nothing wrong with that. It's like, like an actor might need the script first and then later not the script. You might need the script first. But part of your training is to really get this to not be something that you do, but to be something that you are, like walking to the refrigerator to grab a bottle of water. It's not something you think about anymore. Wait a minute, how do I do that? I get up out of the chair, I put the right foot in front of the left foot, and then I do it again, and I repeat that, and then I make a left at the kitchen, and the same way you might need a map when you move. You might need Google Maps when you move to a new area or go to a new area. But when you become very familiar with the area, you know where the supermarket is, you know where the post office is, you know where the movie theater is, you know where the mall is, you know where your friend lives. And you don't need Google Maps anymore. But in the beginning, you might need the map. There's nothing wrong with that. So these rules should be written down. These rules should be staring you in the face. They should be staring you like this, saying, okay, so what you going to do? What are you going to do? I'm waiting. You going to exercise me or what? You want them to challenge you. It doesn't work initially when it's in your mind. That's later. In the beginning, you want it to look at you like this. You want it challenging you. You want it embarrassing you when you don't do what you know you're supposed to do. Remember my Ask Oliver Velez series with that, right? Okay, guys. That was a beautiful thing. All right? There you have it. Powerful, powerful profit-taking rules. All right? Powerful profit-taking rules. So listen. Take this knowledge and run with it. It is filled with life. It is filled with 36 years of profit-taking experience, trading the markets every single day of my life, practically, traders. What is built inside of what I've shared with you is not third-party regurgitated information. This is not something I've gotten from someone else. This is not something that I've read in a book. This is not something I got from someone's seminar. This is from my 36 years of professional trading, all the way back from 1986, when there were no mentors, there were no books, there were no courses, there were no seminars, there was no internet, there was no Facebook groups. This is pure from my heart, from my long experience. And I believe that you can feel that it doesn't come from someone else, that this doesn't come from something else. This comes from me. And I share that today with you. Now, some of you might be ready to join my family. I know this is not for everyone, but some of you, this has hit you at the right time. This has come to you at the right moment, and life has a way of letting us know that there are no coincidences. There's a reason you are listening here to me today. There's a reason that this piece of information, this powerful knowledge hit you today. You needed it. Something drew you to me today. Something has led you to last through this presentation up until this point. And maybe, just maybe, it's because we're supposed to spend the next chapter of our lives together. I have a passion. I want to train you. I want to give you the money necessary to do this. I want to fund you. I don't want you risking your own family's money doing this. I want to build a business for you in this. I want to help you build a business in this. I want to invest in you. I want to train you every day of your life. I want to invest money in you, but I want us to go into business together. And this might be an opportunity that you find interesting. All right. Now, the program that I have is called Self-Start. And I also have an event called the Live Trading Camp. Now, I have always told my traders that the ultimate combination is this. I want you to be able to self-start yourself in trading. And I also want you either to, at the same time or later in your development, experience with me the Live Trading Camp, where you trade live with me. And I teach you one of the most valuable skills I have, which is earning your entire living inside of 20 minutes. So Self-Start is the program that gets you my capital, where you never have to put a single penny of your money into anything. It gets you a $50,000 account to start, where you can go to a $100,000 account, a $250,000 account, and on and on. It gets you a profit share in that business where you earn anywhere between 40 and 60% of the gains. And the Live Trading Camp teaches you how to do your trading inside of 20 minutes every day, which is my specialty. That's what made me famous for the most part on Wall Street. And so, guys, this is the Equity Self-Start program. Every trader goes through this matrix. They get trained, they get educated by me, and then they go through training. Education and training are different. We went through education today, but we did not go through training. I educated you on profit taking, but we did not train for profit taking yet. See, the training part is actually more important than the educational part. Okay? So they go, once you get educated, you go through training with a $50,000 account. Once you have once you have demonstrated your ability to accumulate $3,000 in gains, your training is over, period. Done. Over. You are now a professional trader with your own business. What does that mean? That this $50,000 becomes a real account. And now you get 40% of the gains on that account. Taking profits the right way, entering the right way, doing what you were trained to do. Okay? I get 60% of the gains, but remember, you are not putting anything in. Now, some of you are trading with $5,000, $10,000. It's really not enough. Minimum $50,000 to do this right. All right? And so I provide the capital for you, and I take the losses. You can't lose in this scenario. Only I can lose, right? So your goal in training is to show me that from what you've learned, you can accumulate $3,000. Once you do that, whether that's 2 months, whether that's 3 months, 6 months, a year, whenever you hit $3,000 in gains, it doesn't have to be in a specific period of time. Done. Now, let's go in business together. I drop the money in the account. You get 40% of the gains. I get 60% of the gains. But if you were to lose, and then go away, all the losses are mine. It's my capital. That means I did not train you enough. But once you have achieved $3,000 at this level, you get $100,000 account. And your goal is now to achieve $6,000. You get 40, I get 60. And then you pass the $6,000 profit mark here, boom. I drop $250,000 of buying power in your account. and your goal is $10,000. You get 40, you get 60, I get 60, you get 40, and on and on and on. And yes, you can go all the way up to $50,000. The goal, guys, is to get to 3 and 4, because this is where some serious money can be made. This is where you can start playing see, here you can't, but here you can start playing those 1,000 share lots I told you about, right? Here you'll go up to 500 share lots. And here is where you'd be playing 1,000 share lots. 50 cents is $500. Boom, that can happen in a moment. $1 is $1,000 in your play. All right? And so this is about you starting a business. This is not about you trading for Oliver. You don't trade for me. You trade anytime you want. You trade any days you want. You trade as long as you want. You trade from where you want. It's your business. I just put the money in and I train you. And get this, guys. I will tell you that as long as my money is at risk with you, I will do everything in my power to train you properly, to train you correctly, to never let you falter, because if I mess up in that category, it's my money that's being lost, not yours. You can tell your wife, you can tell your husband, you can tell your family, I am not risking. I am building a future potentially, but I'm not risking anything. Oliver's the one risking on me, and that's very true. All right? So I want you to understand that. Very important. Okay? Why am I doing this? So that's the self-start plan. You get the account and you get the training for life. Now, let me share something with you. This is the last year for this. I'm telling you. I'm done. This is done. I'm done with this program. This is it. Last year. No 2022, gone. Do you understand? This program is gone. So, if it's something you've been thinking about, if it's something that excites you, do it. I'm telling you, do it now, all right? Because there won't be the opportunity later in the future, and that I promise you. All right. Here, there's a live trading camp. Now, guys, this is where I only have 2 things that I want my traders to do. I want them to get into the program and get their funded account. That's self-start. Then I want them to do live trading camp. That's it, and you're done for life. Finished, nothing more. Why live trading camp? Because this is my specialty. This is where I take a trader and I mold them to become a 20-minute trading machine. I want you to be able to make your living in the first 20 minutes. I don't want you to have to trade beyond 20 minutes. If you want to gain more, yes, by all means. But I don't want you to have to. I don't want you to have to sit in front of your computer all day. I don't want you to have to develop blurry eyes and bad bladders because you feel you can't leave your computer screen because you'll miss an opportunity. No, no, no. That's not how we trade. 20 minutes out, done, finish. Got my $800, got my $600, got my $1,500 for today, whatever it is, boom, gone, off to the beach. And it is here where I drill down to the specifics that help you to become that 20-minute specialty trader. So the self-start, this is not the account now. Self-start comes with the full account and the lifetime training with me. Full funding and the lifetime. That's self-start, right? So remember that. There's 2 things here. There's self-start. That's the full thing. That's the full account. That's the full lifetime training with me forever. Right? That's the business. This is the business. This is now, let's become a specialty trader. Let's become a 20-minute trading machine. And after these 2 things, you need nothing ever. There's no part 2. There's no part 3. There's nothing. Done. Finished. Okay? Now, there is a cost to this, of course. All right? Self-start. It's a business. You are putting together your business for $1,700 for the rest of your life. Think about that. You don't have to fund the business. You're just setting it up, $1,700. I take this, I pay my staff with it. I pay the top level traders that trade with you every single day. I pay for the infrastructure, the broadband. I use this to support the development of you as a trader. All right? This is not a one-man operation. You understand? You have a cost associated with training you every day, supporting you every day, asking your questions every day, developing you every day. All right? There's a cost for that. So this is business, guys. But $1,700, think about this over 5 years, traders, 5 years. If you gave yourself 5 years to become a master at this, what's that cost divided by month over 5 years? It's nothing. It's a freaking cup of coffee. Is your trading future worth a cup of coffee every month, every day? Of course it is. Break this down. Don't look at the cost as a whole, but say, look, over a 5-year period, how much is this costing me every day? Wow, nothing. Live trading camp is $1,300 for the whole thing. You don't have to do the whole thing at once. You can do self-start first, and then later down the line, do live trading, or together, do it at a discount for $3,000. And here you are done in the business totally forever for $3,000. Over 3 years, that's $1,000 a year. Over 5 years, that's less than $1,000 a year. Cost per day, nothing. It's less than a Starbucks coffee a day. These programs I used to do for professionals, guys, for $25,000. Same program today is costing you $3,000. It's crazy. All right. But you have until Wednesday. Check this out. Look at how I've dropped the prices for you. Now self-start is $1,500. $1,500 is a dinner with a it's a dinner for the family with a very nice bottle of wine. Come on. You go on a trip for more than that. You get your teeth fixed for more than that. You get a little surgical procedure to make yourself a little more beautiful for more than that. This is more important than all of that. Well, maybe not your teeth, but you know what I'm saying. This is your potential, your future. This can change your life. Now, remember, if you do this yourself, you need to open up your own trading account at a brokerage firm. You need $25,000 or more to day trade. Here, you need $1,500, or in Robinhood or TD Ameritrade, you need to open up for $25,000, and you have to keep that account above $25,000 at all times to day trade. So you pick the thing. Here, you need $1,500 to trade for life. There, you need to maintain an account of $25,000 if you're going to do this on your own. You choose. Most professionals that join Wall Street don't bring their own money to the game. Most professional traders are trading for a firm. They're not bringing their own money to the game. Professionals don't trade their own money. Retail trades their own money. Novices trade their own money. Professionals do not trade their own money. Period. None of them. Zero. $2,000 for the whole thing. What does that cost over 5 years? $2,000 broken down over 5 years. There's 12 months in a year. 12 times 5 divided by 30 days. Wow, the cost is not even a cup of coffee a day. That's how I look at cost, guys. I break the cost down to daily. All right? But look at this. You have until Wednesday to get that $2,000 price, but you got 72 hours. Look at where self-start is now, $1,300. Look at live trading camp. Guys, come on. Now listen, I will tell you this. I am not some random guy on YouTube coming to you. All right? I'm an OG in this space. I've helped to build this industry brick by brick. I've helped to form some of the most influential firms in this industry. I've written some of the most influential books in this industry. I have been hailed by all the financial publications out there. I have been awarded. I traveled around the world speaking to financial organizations for the last 20 years. I am not some random guy on the internet, but I am interested in taking you on and showing the world that regular people can do this, because far too long has this been this notion that regular people can't do this, that you need an Ivy League degree and you need to start at Goldman Sachs or some big giant trading firm. And I was out to prove that wrong, and I have been proving that wrong. And so I go throughout the world helping individuals build their own trading business. This is your trading business, not mine. I just put the money in and we share. Now get this. Anyone who signs up for that 72-hour, you're going to get 60% of the gains. And I'm going to get 40%. Now I'm the minority partner. If you show me that commitment, if you show me that, Oliver, I'm ready to do this. I love traders that be able to hit the buy button. That's a great buy. Boom, I hit the buy button. If you hit the buy button, boom, I'll give you the 60% of the gains on your business. I'll take 40%. You're the majority partner. I'm the minority partner for life. So you get a lower cost and a higher payout. And that's if you take the 72-hour offer. Now, guys, I know this is not for everyone, but it just might be for you. And I'm hoping it is. And there you have it, guys. There's your link to go to, tradingolivervelez.com/promo. Access to your exclusive discounts at that promo. I want to thank every single one of you traders. I want to thank every single one of you for joining me today. I do know that there are so many things you can be doing with your time today. I do know that. You could be out with your families. You could be walking your dog around the park, playing with your kids, whatever. But you're here with me, and it's something that I do not take for granted, traders. I want to thank you for being here. I want to thank you for lasting up until this particular point. You're very special to me. I told you that every single time I'm offered the opportunity to grab a mic, I try to do my best to leave you with something that potentially can affect your trading for the rest of your life. I hope that I have done that. I hope that I have done that today. Thank you so much again. And I'm looking forward to many of you coming on board. Ciao for now, traders. Thank you. Boom.